The Dogecoin bottom is in. The updated chart shows price printing successive wicks into a lavender demand band that begins at $0 Dow and tops out just below $0 and $15,000. So far, every test of that floor has been absorbed, leaving a series of higher two-day closes. All right, Doge only moved slightly off the low, Astronomer wrote, so there still is a 6R plus trade to be scored if it were to go to the highs. The black horizontal at 0.18210 marks the first decisive reclaim. Sunday's session opened at 0.18141, punched to 0.18210, and settled at 0.17548, fractionally under the trigger, but well clear of the gray value area that defines the analyst's risk box. For traders running tight stops, the invalidation sits just under $0.12982, limiting downside to roughly 12.5 cents while keeping the full upside open to a $0.4,000 0.48527 liquidity void shaded in emerald green. If you want a defined risk for a defined reward, Astronomer added, a long as presented also makes sense. Technically, the structure mimics October 2024, when Doge carved a rounded base at 0.10, ignited on rising volume, and topped out at $0.48527 8 weeks later. Last time we left the range mindset was October 24, and we bought Doge at 10C, the analyst reminded readers. It pulled a 5x before retracing for what IMO now has become a higher low. The projection sketched on the chart anticipates a 1 to 2 month sideways chop inside the gray band that caps at roughly 0.175, followed by a staircase advance into the low 0.30s and an autumn test of the December pivot. None of the hand-drawn arrows pierce the old high, underscoring that the thesis is not predicated on price discovery, only on a mean reversion to the last heavy supply node. Given this is an altcoin and expectations are likely beyond 0.5, having heavy spot bags already pays for little risk, he wrote. They still may take time and take off slower than BTC, but the RRIMO will be higher. As ever, confirmation will come or fail on the tape. A two-day close above $0.2,000 would establish a higher time frame reversal and expose 0.30 liquidity, whereas a settlement beneath 0.12982 would invalidate the setup and reopen the 10-cent handle. Until then, astronomers' call rests on the premise that Bitcoin bottoms first, Ethereum follows, and one by one alts bottom out through cyclical timing, sentiment, and their respective POIs. Dogecoin, he contends, just ticked every box. At press time, Doge traded at 0.173.